Welcome guys to the May 13th trade recap. Woohoo! Where is my trade? There it is! I forgot that I had all this open. But there's a trade, beauty for me. I already got everything marked out so we can get into this nice, fast, and simple and easy as possible. Alright. Now, one thing before we get into all this, I'm going to remove all the drawings real quick, just so I can show you guys something. And it comes back. Alright, cool. So, if you might be looking, Jay Javesh, what are those little thingies that you have that says New York and London? Well, I can show you real quick. Let me hop on the 30-minute time frame so you guys can see that a lot better. Oh, what do we see? What do we see? What do we see? London kill zone high, London kill zone low, London kill zone low, London kill zone high. Right. So, this is an indicator tool that I use that I got for free on TradingView to help me mark out future take profits with session highs and session lows. If you want, right there, take some good time, read that down, jot them down. They're both essentially the same thing. I just have two of them for some reason, so I can see this a lot better, because like, if we take off one of them, then it's pretty dull, but if we add it back, then it's pretty vibrant. So if you guys want this same indicator kit that I use, this is when I first started out, helped me so far. That's it right there. Alright, now let's get into the trade. Are all the drawings back? Yep, all the drawings are back. I'm gonna get rid of this. I'm gonna drag this all the way up to the top, just so we have time to show you guys what everything is. I'm gonna put it down there, and then we'll go into it a little bit. So one thing that I want to mark out first is our London highs and London lows that we did not hit. We did not hit this London high, so that's why it's highlighted in blue as a take profit. And we did not hit, that was actually the only low. Oh, sorry, this low right here was another London low all the way down here that we did not hit, this blue line, so that could have been a max take profit range. But at the same time, I knew that over these sessions, that going into Asia session, into London session, we have this big uptrend, and that we're going to have a new session open manipulation, so we're going to go to the downside after all the high uptrend volatility. So one thing I wanted to mark out, this 1 hour draw on liquidity right here, that lies right there. I didn't want to fully target this one because this would have been a really big tick move that price was not guaranteed to hit. It's a 393 tick move, so price is not guaranteed to hit that, but price is 100% guaranteed to hit this low. Right, so let's run into the trade on why I believe that low got hit. So first thing that happens, alright, we break structure on the London low, so we're going to move down. What else do we have? We have a filament of this big overnight gap, this new day open gap. So I'll just highlight it right here so you guys can see that, keep that in mind. We have a filament of this gap and we're filling into it. So two things could either happen here. We could have used this as a fair value gap to get orders filled to the upside, and we could have targeted up to this London high, or if we don't and we see points out of it, then we could come down and we could safely target these lows right here. I'm going to just get rid of that so far so we don't have a big purple box on the screen. Let's go over to 5 minute and let's show you guys the breakdown. So what do we have? Forgot to mark this out. Here we go. So after we break structure on those lows, and I know we want to push down further to our 1 hour drawn liquidity right here, we come in and we're filling up this fair value gap, and then we start making moves out of it. What else do we have? We have an inverse fair value gap right there, right? Inverse fair value gap right there. So let's hop over to the 1 minute time frame. So now we can look for our entries, because we're bearish on higher time frame, we're bearish on 5 minute time frame. All we got to look for is our 1 minute time frame entries. So at the point of this candle right here coming down to this low, right, we actually broke structure on this low with this red candle right here. We actually also broke structure. We broke structure right there, which was a significant low that we had broken structure on, so we can continue our downtrend. And this was my assumption, right? So we come in and then we're filling in this for value gap, then we inverse this for value gap, and now we're moving to the downside. Let me hide this real quick so you guys can see it a bit easier. So after we inverse the fair value gap, after every inverse fair value gap, we have to have a form of retracement. We have a fair value gap right here. I can highlight it real quick in blue so you guys know what I'm talking about. I'll highlight it in blue so that way it's easier for y'all to see. Right, fair value gap right there. That fair value gap wasn't important because that did not get tapped into. What actually got tapped into was this blue fair value gap right here, the small 1 minute one on market open, because we had the market open manipulation to the downside because we came down and we swept this low resistance 1 minute low, and we're coming down to this low, right? We have relative equal lows right here, so that is a point for us to change trend. We changed trend into this fair value gap. Even if we traded into this one, that would have been good. And then we come in and now we're still continuing this downtrend to the downside. We had the breaker structure right here. Honestly, I would have traded fully base, and then right, so then we come in and we break structure down here. Now I have to look for a point of reversal, a point to come up, and I have to look for one more confirmation confluence. What do we have? We have the fair value gap filament right there. And then this move was honestly just, it was just textbook, guys. I mean, there was nothing else much to it. That is a 150 tick move. Honestly, a very safe trade that we could have taken. And so we trade down and we come to here. Now I want to break down what we did. One, we broke structure on London low, so that means we're going to change our trend to the downside. What else do we have? We have a filament of a 5 minute fair value gap right here, so that means, all right, we're going to confirm that this downtrend. What else do we have? We come down to the 1 minute time frame, and on the 1 minute time frame we have a, if I can get close enough to it, we have the 1 minute breaker structure like I said earlier. So what is that? That's breaker structure to the downside, so that's our confirmation that we could potentially change trend to the downside after all the uptrend volatility during the previous sessions. And then we have the 5 minute fair value gap filament. The 5 minute fair value gap filament confirms that we're going to change trend, and then within that 5 minute fair value gap filament, we also had the 5 minute inversion of a fair value gap to mean that we're confirming trend to the downside. And then we have a breaker structure on a 1 minute low. That breaker structure causes us to fill a 1 minute fair value gap. We retrace a lot lower, and we get a second fair value gap filament, and we can after that we can safely target. Right there we have our confirmation, we have our confluence to change trend, and we have 6 confirmation confluences for targeting the downside. So really safe, really paper textbook, really good price action. Now let's move on to the second trade. So why did I not want to target these lows all the way down here? I didn't want to target those lows because those lows weren't guaranteed to get hit. We obviously know that what we hit right here was a 1 hour draw on liquidity. 1 hour draws on liquidity are very powerful as to take profits and areas price can reverse. So what do I want to look for out of this? I want to look for where price can reverse. I want to look for a trend where price can reverse. So price starts reversing up. So now I know, I'm like, all right, in order for us to reverse up fully, we have to break structure on this significant high right there. Let's wait till we get there. All right. So what happens first off? So we come in, and this big blue box that I have highlighted right here, this big blue box is our fair value gaps on the 1 minute time frame. We come in, and if we fill these fair value gaps, we could have looked for moves to the downside. We're filling them a little bit, but obviously price action is getting slow into this range. So then boom, we break structure out of the fair value gap. Now we gotta wait for a retrace. And if you see within this 4 candle spread, there isn't any equilibrium. Well, sorry, there is an equilibrium, but there isn't any fair value gaps that we could trade off of. So what I'm going to do is I'm going to throw on my Gann box, not my Gann box, I'm going to throw on my Fibonacci retracement. That's what you see these little percentage at. This is a Fibonacci retracement tool. And then after we come in, we're looking for equilibrium at the 50% line. And even if we close into the 75% line, that's also good because that's our golden zone for us to change to the upside. So then we start changing to the upside. Can I buy fully off this? No, we cannot. Because what can this be used as? This can be used as a draw on liquidity to the downside. So now we got to wait for breaker structure. What do we have? We have very slow price action. I mean, price action was really slow right here. But to me, this was honestly a very easy trade for me to take because we broke structure on this high. And honestly, I wasn't looking for full take profits all the way up to London high. I was honestly looking for full take profits up to our 90 percentile right there, our 50 percentile right there. So we came in, and then we get the breaker structure right here, and then we start making trend down here just to fill in more orders right here along this 4 candle spread right there. We're coming down, we're filling nice deep orders, and we're retracing back up, we're retracing back down, relative equal lows, drawing liquidity to the upside. We can use that as a reversal. Honestly, I bought in right here. This was kind of a more sketchier buy-in, only because price action started to slow down once we got into this range. And I can tell you why it slowed down just a quite bit, because if we remember that big box that I had highlighted, that big box that I had highlighted was this big box right here. I'm gonna put it in blue so you guys can see. That big box, wrong space, that big box that we were talking about ended up being a 15-minute fair value gap. If we would have filled this 15-minute fair value gap, we would have went to the downside, right? So that's why it was very tricky trading in that range. That's why price action was slowing down. Price was confused whether or not it wanted to go up or if it wanted to go down, until we see clear moves and good price action to the uptrend. So once we come in and we break structures across all these highs right here, then we could be alright, now we're going to trade down. I wonder what this black line is doing here. Oh, that black line is on top of that high. It's between, you guys probably can't even see it, right there. That green candle and that red candle, that is a very significant high that we had. We would have waited to break structure on this high. What do? We come in, we break structure on that high. What do we gotta wait for? We gotta wait for our reversal trend. We come down, we fill orders, and boom, like that, paper textbook up here. Price just wanted to come in and manipulate everybody down here. I unfortunately got manipulated, but did we lose the trade? No. Were we profitable? Yes. Did we hit all our take profits? Of course. So we come in, we get the orders filled, and then the reason why I targeted price all the way up here is because I knew that we were still in that big bearish fair value gap range, and that big fair value gap range could come and bite us in the ass later. So I just wanted to target the top of that fair value gap. Price action started slowing down right here, but what do we see? We have these fair value gaps right here. Price comes in, price fills that fair value gap, and we can move to the upside. Honestly, this is not used right here for anything special. I was thinking about getting a play on shorts to the downside later in the day, but knowing me, after I get my two wins, that's enough for me. Honestly, I wouldn't want wins, honestly, like anything more than 2. It's just because as traders we have to have good psychology, and in order to have good psychology we have to know how many trades are we willing to take and how many trades are we willing to lose. You know, we couldn't win this trade, so I was like, you know what, let's win another trade. We came in and we won that trade. We technically won 2 trades right here. We just didn't place any money on this one. We placed money on this one, right? That's 2 wins already on the day. We don't want to be greedy as traders. We want to live to see another day, and we don't want to blow our account on something dumb like this, which we don't know is guaranteed. So then we started retracing up. We ended up eventually hitting these London highs, but price action obviously started to slow down right about here, and these were kind of our only 2 trades for today. All in all, I'm just bring that back. All in all, today's trade was actually amazing. I love today's trade, the way it played out. If you guys want to take a quick screenshot of this so you guys can learn, you guys can go back on your own time, open the charts on your end and see exactly what I marked out. And if there's something that you're missing, if there's something that I'm missing that you guys caught on, make sure you guys leave it in the comments or note it to yourself so we can all become better traders. Other than that, thank you for watching the video. Peace and love always, and I'll see you in the next one.